tonight. All right. So basically yesterday we did the terminologies and all that, but today I told you guys we are going to start with the basics. And the basics is basically the chat basics because that's where all forex starts from. And after that, I'll just talk about how you can really start. I just want to give out the knowledge, and after giving out the knowledge, we think about how we can start and how to go about everything. So for the next 30 minutes, let's all try our best to focus and try and get what I'm trying to say. I'll give opportunity for us to ask questions and all that. So before that, let's start with the buy and selling of pairs. So yesterday we talked about currency pairs and the main idea about forex. And today we are starting from the terminology long or buy and short or sell. So on the market, two things happens. It's either you are looking to buy the market. That means if the market moves up, you will be in profit. So buying the market is basically saying you expect market to go up. So now you want to go with the flow. That means you want to buy the market. And selling the market is basically you knowing market is going down like this and you want to go with the flow, and because of that you are selling the market. So if you want to take advantage of the market and you say you want to buy, that means at the end of the day, if market moves up, you are in profit, but if market moves down, you are in loss. It has gone against you. The same way, like it also applies to the sell scenario. If market moves up, it goes against you. If markets move down, you are in profit. So there's a clear example on this chart as I speak. You can see this person tried to buy the market. As you can see that his green side of his box shows he wants to buy the market or long the market. And of course, you see the market moved up. That means this person is what in profit. So let me do it P. But look at this side. This person wanted to what sell the market. And what happened? Market moved up. For the same scenario, market moved up. And what has happened here? This person has lost to the market. So let's say L. So this is what happens on the market. You trying to know where market is moving, and at the end of the day, due to the analysis and the things you did on the chart, you'll be like, okay, now I can see the market wants to buy. Now I'm going to buy the market. And if it's true that your analysis was right, you are in profit. But if market goes against you as it has actually happened here, that means you're going to be in lost. And this is what we call the buying and selling in the market. Basically what happens on the market. This is what happens. Every single time there's people who are trying to sell, there are people who are trying to also buy, depending on what they saw and why they want to. So with time, I actually take you guys through things you can do on the chat to know if you have to buy the market or sell the market. But for now, we are just looking at the basics. The basics. So kindly try your best to follow. And if you have any question, just put it down. And when it's time for uh, questions, if I give out opportunity for you guys to ask questions, you just ask and I'll help you out with that. All right, so let's also talk. Okay, I think I talked about the currency pairs and all that last yesterday. I talked about them. All right, so there are types of orders on the market. You see, as I have been saying as we started this, I was saying something like you want to buy the market, you want to sell the market. So how is it done? If someone is buying the market, how is the person buying the market? How is the person selling the market? So there are type or ways which you can get into a trade, into either your buy trade, that means you want to go up, or your sell trade. And as people say, there are two types. The mechanical way, that means you basically just enter the buy or sell. Mechanical way. The mechanical way, you basically just enter. You just click your buy or click your sell, and market moves. And we have the pending orders. So for pending orders, what you do is you mark a zone and you'll be like, okay, now I'm marking this area. Price is somewhere here. If it gets here, if it gets to my zone, it should buy for me. Or if it gets to my zone, it will sell for me. And that zone you marked for market to execute there is what we call the pending order. Let me bring it to real life. It's like you going to the market and telling the market women maybe you want to buy one kind of food stuff, but the price is so high and you anticipate that the price is actually coming to be low before it goes high again. So you tell the market women, okay, if price comes to this amount, let's say 50, let's say 51. Now the price is at 80. When price comes to 51, please um put like four of them down for me. I'll come for them. Like just buy four for me. And if you buy it for me, if price gets to 90, sell them and I'll come for my money. So now look at this two scenario. This woman has actually placed a buy order to buy the price or to buy that product at 51 when it gets there. And that order is what we call the pending order. It is actually waiting to be executed. It's not actually something you do with like let's say you just go and be like, I'm buying that. No, no. You just do your order ahead of time and you place it. If market gets to that place, you are putting into order. Market or like your order is also taken and everything is actually taken into place. So yesterday I did an example on a restaurant where we have waiters. Are you getting it? And this time the waiter comes for your order. Okay, you want to order this, you want to buy this, you want to buy this. Now what you have done is actually a pending order. Are you getting it? Now you're waiting for the product you uh, actually orders. So until the product comes, your thing has not actually been executed. So you have made a pending order to the waiter. The waiter has to send it to the one preparing it. And until that person receives it, your order is not being executed. Are you getting it? Then basically you telling them to buy for you at 51 is what we call the pending order, and you telling them to sell for you at 90 is what we call the pending order. These kind of orders are used by people who are actually busy. Maybe you can't be on the chart for the whole day. So what you do is you place your pending order, you place your pending order, and when market gets to your pending order, it just executes and starts to be in your favor. And we have the mechanical, as I said, you just go on the chart to be like, okay, now I just want to take my sell. I want to take my buy, and market just executes it for you, then you're good to go. So as you can see at this place, an example was given in the book where this person placed a buy order. That means market was moving here, market was moving up. Look, this was the zone the person was expecting. Market was just moving up. And when market got to his zone, market executed his trade to buy for him and it bought to the opposing side to where he wants market to get to. And this is what we call a buy, or let's say basically a pending order. Are you getting it? Order that actually plays ahead of time to execute you and actually just take you into the trade. And as you actually becoming a trader, as in people who wants to become a trader, there are some things you also have to think about. What are the things? These are basically what type of trader you want to be, because getting into this industry, there are a lot of traders you can become. There are basically a lot, but basically, as a beginner, you have to understand the two types of traders. We have the scalpers and we have the swing traders. Basically, scalpers are people who get in and out of the market at a faster rate, at a really, really faster rate. So they get into trades at, let's say, within just 30 minutes, they are out. So they use smaller time frames, like they get into trades and within some few minutes, they are out. But for swing traders, they can get on the trade for days, hours, even weeks. Are you getting it? And basically, these people, we will say these people are the most patient people in the market, and these people are basically impatient. Like not in a bad way. I'm trying to say they don't want to wait for long, so they want to just do everything quick and they are done. These people just want to wait till market gets to a specific point, so they just have patience to wait for market to move to that area. I get it. So if you think you don't want to waste a lot of time on the market and you want to learn or equip yourself in such a way that you just get to the market, do everything you want to do within some few minutes and leave, then scalping is the right thing for you. But if you're someone who is actually busy and don't want to be on the chart for long, that you place your pending order, you know where your market to get you, then you get on your trade and boom, you just someone will say just JI, wait for market to just get to your zone and all that. So this is also something um, that I want you guys to know because it's what we're actually going to learn on the next topic or something like the next terminology we are talking about. All right, let's move. We don't have a lot of time. So yeah. And also we have the different types of trading. And this thing actually have to give a slight kind of long explanation. I don't want to talk about the first one. But for now, let's talk about the second one and the third one. There's this thing we call the technical trading. Technical trading is basically having um, a set of directions, like let's say a set of analysis where you do, like let's say, basically a set of tools used to analyze the market and be like, okay, now I think market, looking at what is happening on this chart, market can go to this area. Looking at what is happening on this chart, market can go to this area. Market can go to this area. Market can go to this area because I can see maybe 1+1. Like it's kind of an algorithm, like having um, some set of rules, some set of movements, some sets of um, I don't know how to put it, but some set of let me put it algorithm or coding, like coding, yeah. That calls for a certain kind of movement and all that. You'd be like, okay, I have seen this kind of movement, and I think our market do like market actually does this every single time, and because of this, I will know market is going to do that. And also, you can be like, okay, now I've seen that, I've seen that, I've seen that, and this is the reason I think market is going to do that, depending on what I've seen on the chart. And for fundamental trading, this is what happens when, as I said yesterday, um, the kind of people who actually push the market is politics, hedge funds, and we have banks. So fundamental trading is you actually taking information from what is happening within these areas and how it can actually affect the market. And as I said, some people will be like, okay, if we are in a country and a good president comes on board, this president can help increase our economy. If the president helps our economy to become strong, our currency is also going to become strong. That means the chart of our currency against other currencies will actually change. And this is what we call fundamental trading, how these kind of events can affect what happens on the market. This is what we call fundamentals. Fundamentals is basically how geological, geopolitical events and events that happens in our central banks and basically our marketplace in the whole happens to affect the charts in the market. I got it. And I'm giving you guys a disclaimer. We are in a season where this fundamental kind of analysis and trading helps a lot because, okay, let me just keep that for later. Let me keep it for later. We are in a season. Just know that if you are writing something, I just put it and keep it like in bold. We are in a season where fundamental trading is basically important for every single trader. You can be in a good trade, the analysis is actually good. Something fundamental can come in, make it all look like you never did any analysis. And you have to put that in mind. So this is what we call fundamental trader. And I've explained scalpers, they go into trades for a short period of time. They don't spend a lot of time on the chart, and all they do is get in, get out fast. So they can be in the chat for like 5 minutes, 10 minutes, they are done. 10 minutes, 15 minutes, they are done. Yes. And for swingers, they just hold the trade for a long time. And we also have day traders. These people, although they are like scalpers or something, but they don't get into a trade for a long time, but they find times within the day, take their trades, and their trades are just within 24 hours. It's just within 24 hours, and these are day traders. Are you getting it? Day traders. All right. So as we all understand, have ideas about the types of traders, let's talk about one thing about fundamentals. We just have to start from fundamentals before we start talking about technicals, because like I said, technicals is basically the um, analytical way of looking at the market and the chart. And this is what I would say it comprises market comprises of maybe 70% of the technical. And this is what we'll be doing in the next 2 days. But for now, let's look at the fundamental side. And I won't go deep into that. Just give you the basics for you guys to get it. Then for the technicals, I'll give you something that every single beginner can be using to doing something on the chart, doing something on the market, seeing some results on the market. If you're following me, just give me a thumbs up if you are really following what you are doing here. Let me see some thumbs up here. All right. All right. Thank you guys. Thank you. All right. Sure. Okay, so now let's talk about the news events. So as I said, fundamentals is basically how geopolitical events affects our economy and how these events also have affects the charts and the trading world. So if this thing happens, how do these data come out? This data comes out when our central banks wants to give out info about how the economy is moving, how politics is actually affecting them in their banks, how the bank is actually trying to help strengthen the currency, and how bad the currency is actually moving, because banks don't come out to give out how their currency is actually performing. They also give out info on how the currency is also underperforming and how they want to fix it, how inflation is going, how that is going on. All these things comes together to talk about news. That's how we see it as traders. We call it news. We call it fundamental news. And if we go to where we like, let's say for example, a lot of us listening to news, let's say for Ghanaians, we have TV3 giving us news, Adom TV, that. But look at this. When we are looking at the news or watching news, there's this aspect we call the financial news. They be like, it's financial time. But for us traders, we say for fundamental news because we actually in the financial aspect, but now we want to look at the fundamental aspect where it affects us. And these are the things that until you become a trader, you never know the importance of them saying today dollar was bought at 16 cedis and it was sold at 17 cedis. Don't At first I used to see them say it and they will give us a chart of those things. And I never saw the importance of that until I became a trader. I was like, hey, this is important. And they'll be like, gold dropped by this percentage and gold price went from here to there, and we're expecting gold price to move from here to there. So as a trader, you hear them say from our analysis, we can know that gold is going to increase in price. You'll be like, okay, now tomorrow I'm going to do my analysis. And depending on what they said from the news and their projection, let me see if I can get some trades from this. If you are not a trader, you never see the importance of those things they do. It is what we call news, where central banks of every single country on specific times, specific days, specific dates, they come out to give out info about their economy and how they are trying to fix it and ways they are going to fix it. And this info they bring out have huge impacts on the market. And the impact it has is in different folds. So now I'm going to open a chart and give you analysis on that. So we have different sites we use to check for news. And the one I use is Forest Factory. The person who did this PDF, as I told you guys, this doesn't belong to me. The person was saying you can be using investing.com, Daily FX, but he also talked about Forest Factory, which is what I really use. So can you see Forest Factory at the moment? If you can see Forest Factory on my chat, my screen, just give a thumbs up if you can see Forest Factory. Like you can see a new chart, like something new. Nice, 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 nice. Let's be fast because we have our time here is not that much. And I want to try my best to finish up a lot of things today so that for the next 2 days we learn how to analyze the chart for ourselves. Learn how to analyze the chart for ourselves. All right. So now we are seeing something here, but I've actually filtered out some things from my chart. All right. So now, for example, let me bring them up. All right. Okay. So now, as you look at this area, you can see some red folders, some yellow folders, some kind of brown folders that this is the degree to which market is going, or this news is actually going to actually affect the market. As you can see, impact. You can see impact where I'm actually highlighting. Let me circle it for you guys. You can see them saying what impact. That means how is this market or this news going to affect market? So if you see the market giving you a red folder, that means it's actually going to affect it at a higher rate. If you see a yellow folder, a moderate, like this orange folder, moderate, you see, I can't see an ash folder here, but let me open filter for you to see. If you see this ash folder, that means market is not going to affect the market that much. If you see this yellow, oh, it's moderate. If you see this orange, it's moderate. So it actually affects it in increasing color of red because as you can see from yellow, you add a little bit of red and you're getting your orange and more red is giving to you red. So basically, as it increases to red, you see that it's actually going to affect the market very well. It's really going to affect the market very, very well. All right, so this is what we call information news data. You go to Forest Factory before you trade every single morning or every single day or before you enter into a new week, try your best to look at the news events for the whole week. So now this is just for Monday. This is what happened today, Monday. So tomorrow, Tuesday, let's look at some news events that are actually going to happen tomorrow. And you can see that for every single day, there's news. And the news, the first one is BOG Corp CPI for the whole year. And look at what it is for what currency? Japanese yen, JPY. And the next news is for euro pairs. So that means it's going to affect only euro pairs. Any pair that has euro attached to it is actually going to affect it. And the first one is for JPY. So any pair that has JPY attached to it is going to affect it. The next one is for pound, the GBP. So if this news is released and has any effect on the market for any pair that has GBP attached, is going to affect it. And if you see USD, that means for any pair that have USD attached, is going to affect it. So we have just 10 minutes left and I don't want to rush things. So I'm giving up the chance for you guys to ask questions using these 10 minutes and I'm going to answer you guys through that. So if you have any question, just raise your hand. I'll ask you to mute yourself and ask. And if you can't do that, just type it into the chat box. I'll go through it and keep answering them as well. So just type your questions for the next 10 minutes. Just drop your questions in the chat box or just raise your hand. I'll see it for you guys to um ask. Joshua, you can unmute yourself and
Okay, hello, hi, good evening.
good evening.
Okay, so concerning the pairs, like the currency pairs and the trading sessions, like let's say the Asian session, the New York session, and the London session, like does the pair.
Hello. Hello. Please, if anyone wants to also ask a question, you can also raise your hand and then go from there. I think someone dropped a question about yesterday's lesson. I'll try my best on how you guys can get access to yesterday's lesson. I'll give you info on the page, so kindly be alert to get any info like that. Kindly be alert on that. If you have any question, just raise your hand and I'll try and basically help out with anything you need. Yeah, yeah, it's actually risky to take a trade on a pair knowing there's a news release. It's actually risky. You shouldn't try it. Don't. As a beginner, don't try trading news. Don't try trading news as a beginner. Don't. You end up losing your account and um you will end up saying Forex is a scam, because anytime there's news release, no one is certain on what type of data they are releasing. Is the data going to favor us or is the data going to go against us? And if it goes against you, there's no saving because I've seen it a lot of times where I even had an SL of, let's say, I wanted to risk just 5 USD. And because of the news, all the account went. I had a stop loss, but markets took everything because of the volatility. No one is going to save you at that moment, not even a broker with their saving amount, because sometimes some brokers they can save you with something, that I get it. But this time it's not going to happen. If you mess up trading on news, you can lose everything you have in your account. So don't try. So does anyone have any other question? Then move on. Yeah, okay. Steven, you can unmute yourself and speak.
Hello.
Hello.
Please, my question is, can you get into the news and know the direction of the market and also its effect on your trade?
Pardon?
Um, I'm asking, can you get into get the information of the news that they are giving out to know the direction of which the market is going to move?
Okay, yes, you can get the direction, the news. That's what we call the post news trades, where after news, you looked at the info they gave and you look at how it affected the currency pair and look at how you take a trade. So example for dollar, we have a main currency that affects every single pair, knows how dollar is being traded against every single pair, and that's what we call the DXY, dollar index. So if you see that dollar index is strong or moving up, that means any currency that has dollar attached to it, let's say GBP, USD, Euro USD, like every pair that has dollar at their bottom, like I say SXX USD pairs, they are all going to drop because dollar is now strong. That means if dollar is strong, you need less dollar to buy them. Are you getting it? And if dollar is strong, that means USD, XXX, any pair that's attached to dollar is also going to be strong because you need a lot of those currencies to buy hot USD. And this is what we see. If you go onto the news data and the news data is positive for the XY, and because of that, the release of the news caused the XY to rise up, what you expect is all these kind of pairs dropping and all these kind of pairs what buying. And if the XY dropped because of the news release, what you're expecting is for all these XSX USD pairs to what rise and all USD SXS pairs to what drop. But keep gold out. Gold is not included. Although gold is UAX and XAU USD, but don't put it as part of these guys. This is the disclaimer I'm giving you. Don't put it as part of these guys. Don't put it. All right. I think that should be okay for you for now. All right. Any other person that like who also has any question? We have just 1 minute remaining. So if you have any question, just be fast, or you can just drop it on our chat page, and I'll help you out with that there. Okay. All right. For books. Sincerely, myself, I don't like reading, so I don't have any books. And please, I want to know how we can calculate pairs for each of the currencies. All right, I think someone has requested for PIPS calculation. That means remind me tomorrow. On our next meeting, I'll give you the info. On our next meeting, we will be doing PIP calculation. Give me, I'll talk about that. Or maybe we can even do it on our chat page. I'll explain it on the chat page when we do it so we can move faster. I think CK wanted to ask a question. CK, you can mute yourself. We have 1 minute. Then